I was wondering whether you got to see those numbers, inflation numbers. So inflation sitting at 3.25% in November, down from 4.14%. Is that the kind of number you had expected to come out of the inflation rate? We did have estimates coming in at 3.95% for November.
Well, it's a pleasant surprise, obviously. That should portend lower interest rates, lower yields, therefore, and hopefully better asset prices going forward. So let's just see how that works.
All right, let's look at the general market now, ending in positive territory in today's trading session. Talk us through some of the major movers in the session. Which were your top gainers?
No, when I left the office, I had not really looked at the numbers critically. Although generally the trend for the whole week was not as good as expected. We just erased some of the losses for previous days, but over the last 4 or 5 days, trend has been downwards. Some losses in some key counters like Mumias, but Safaricom held its own, so we are happy about that. We expect it to go strongly forward because of good fundamentals. Now again, lower yields, should expect stronger prices, asset prices, Safaricom being one of them. Of course, we are alive to the fact that some of the things that's holding down share prices include political risk. So, well, we're not too worried right now about fundamentals. We're just watching. It's the technicals that probably move the market right now.
Looking at an agricultural stock, Kakuzi issuing a profit warning in today's trading session. We did have Williamson's Tea and Capturia out with some rather disappointing results. So it's not surprising that Kakuzi has come out with a profit warning. What did you make of that?
Well, they attributed part of the profit warning to weak prices from Europe, strengthening of the shilling against the euro as well, and we suspect also operating costs must have gone up, so all that must have weakened margins. How we will see in the coming few days, but we don't really expect profitability to go down, but you never know. It is nowadays volatility of profits can be higher than you expect.
And how are you playing the agricultural sector right now? Are you in Williamson's Tea? Are you looking at Kakuzi, or perhaps is there another stock that you're favouring right now within the sector, or are you perhaps staying away from it right now?
Incidentally, we had identified both Kakuzi and Sasini as interesting stocks to look at. Perhaps what we'll be looking is buying Kakuzi on the dips, but we'll buy on news after the announcement. We have a pretty good picture of what's going on. We're obviously watching Europe to see what's going on over there. The euro crisis obviously is not helping. And Europe happens to be one of our biggest trading partners, especially when you talk about agricultural stocks. Most companies, Williamson Tea, Kakuzi, most of the markets are in Europe right now. So euro weakness or rather weakness in the Europe's economy is a concern. Obviously, euro strengthening against the shilling. I mean, the shilling strengthening against the euro is also a concern. So we will be looking at those two. But I think long term, I still favor both Kakuzi and Sasini because of currency weakness. I rather like the story of being in commodities.
Well, looking at the banking sector, KCB has got a new CEO now at the helm. What do you make of him?
He's a pretty young chap, 37, or so they say. He looks very, I've sat through one of his presentations, very articulate gentleman, background in finance and strategy. I'd have liked a bit of marketing to go with that as well, but we're not too worried about that as for now. McKinsey just finished. I'm not even sure they're done yet with KCB. The KCB had retained McKinsey to develop their strategy. So I suspect that he'll be going a lot with that, which one of the key outputs will be lower cost to income ratios, and hopefully better performing assets. So we will expect our return on assets to grow on that. We also expect return on equity to grow as well. So for us, I think a steady hand would probably be enough to get, and we think he can be able to offer that.
And looking at the overall market, like you say, this week was rather volatile. What can we expect in next week's trading session?
Well, probably more of the same. One key thing we've noticed is the short-term government papers. Interest rates are dropping, but at the same time, share prices are dropping. That suggests to us some sort of flight to safety, where investors are exiting equities and putting their money in short-term paper, obviously with political risk in mind, keeping in mind that the elections will be around March next year. So people are beginning to take positions to sustain capital as opposed to looking for a return on capital right now.